without going into what the fundamental reasons for the correction, etc. were, but it was very clear that the correction overnight, the US market correction overnight, was led by tech stocks. So here are a couple of figures to kind of sort of keep your eyes on closely. And this is purely with regards to the NASDAQ. The NASDAQ 100 yesterday closed below a key support, which is the 55-day moving average. There have been lots of calls recently that maybe the index has overextended itself. It's been too fast, too soon, and it needs a bit of a breather. And maybe that is what we are getting. But we did yesterday close below the 55-day moving average. And that has brought on calls from the sell side for a slightly deeper kind of a correction. Many will be watching out for a weekly close below 57.25 on the NASDAQ 100. That's 5,725. And a weekly close below that level essentially would confirm what is essentially described as a bearish outside. And I think Sandeep, our technical analyst, etc., can talk about that if they wish to. The 200-day moving average is still far away. It's at about 5,214. Right? I mean, so it is quite a distance, but just a number out there to keep your eyes on. The question, I mean, as in any correction, which is the first question, is this just a correction? Or is this, I mean, a change of a trend or anything? Now, I mean, the NASDAQ, I mean, the Nifty, for example, is down 2%. From the all-time highs. The high was about 97.10, we're at about 9478. The NASDAQ 100, for example, hasn't really corrected that much. It's just indicating that there may be maybe a bit of a deeper correction kind of coming. But I think once that happens, people will start asking the question whether something has changed or this is just letting off steam. If it is the latter, letting off steam, I think no problem, but we'd only be wiser in hindsight. Ekta.
Okay.